Good morning, traders. It's Monday, March 23rd at 4:15 a.m. Well, the market is continuing to melt, and that's kind of expected with the tens of billions of dollars that have been flowing out of the SPY. I want to share with you a tweet that I put out on Friday at the dark pool close. This is the largest trade we've had in a very long time. There's a few of them. It was options expiration, and Friday was also ex-dividend for the SPY as well. But look at this, there's 26 million shares here between 652.75 and 658.02. So one was the late print. I think this one here, this 10.5 million, but this together is $15 billion, and we're below all of that. And so I wanted to point that out. Let's look at it a different way. These are the late prints. These are the ones that are reported 24 hours late, and for good reason. This one from March 20th, 658.02, this price should have been in the previous day's price and volume, but 10.5 million shares accounted for 6% of all of the volume traded was this one trade. That's the dark pools in action. 166 million shares on Friday. This was absolutely massive, especially with the OPEX and things like that. But out of this 166 million, 6% of that was this one trade, 10 million shares. Although it says 76 trades, it's exactly at this price, and they're all the specific share sizes that make that up. It's a $7 billion trade. So when we look at this, all of these ones that were below, and you start adding these up, 7 billion, 3, that makes 10, 15, 20, 22, 24, you know, we're at billions and billions of dollars. And the Qs as well, 6.4 million shares yesterday. That was also almost 7%, 3.8 billion. But when you start adding these up as well, these institutions, they don't normally lose money, so they know in advance of what's actually going on. So because the market's melting, I have the SPY and the QQQs today. So let's go ahead and look at this. So last 30 days, these are the top 10 largest trades in the last 30 days. And you can see here coming back February 22nd to March 23rd. Now, we always look back 30 days, and we saw all of this that was going on in here. But now we're below everything. We've pulled back, tested the prints, pulled back, now tested these moving averages. Then we had these consolidation of prints here in the last several days, and then moved down below my 200 simple, 200 exponential, and this is just rocketing down. So there's 9 million, 5 million, 7.2. All of this is billions and billions of dollars. We're coming down to my 250 simple moving average at 640.56. We're very close to that, and we're already 18 minutes into the market open, and we're already down $5. So we can bounce as well. So if you're going to take trades, retracement trades, you've just got to be careful, because bounces, and we're bearish, that'll be some profit taking. And so just be careful of that. And we've got this momentum where the 4 and the 8 exponential are moving apart, and we're following this here. So let's see where we can go. Probably 640. If we don't hold 640, we can probably come down 630 to 620 on that over the next few days. Now, if we retrace, it would be up to the 4 exponential moving average around 652. That still gives us $8 or $9 to get up here, and then potentially up to this moving average here, my 200 simple, which is about 657, something like that. So the ATR on this is about $10 now. We've been averaging about $10 a day. And so when we look at this from when we started breaking out of this back here, this is 677. So this is about 35 points that we've got in this break up and then back down here. So once this was kind of confirmed, yeah, so that's quite a bit. So let's go ahead and map this out so we can make money on both sides. We do have a bearish sort of bias at the moment, but we try not to trade without a bias. So what we have is, if we break above a certain level, then we have a trade setup. And if we break below a specific level, then we have another trade setup. So for you intraday scalpers, that's the purpose of this video, is without a bias, then you actually have a trading plan. So what we're going to do is we're going to be bullish above 644 on the SPY. Target 645.28. We have this pocket 646.38, 647.47. Then we've got 649.67 and 99. That's a double one here, or 32 cents apart. It's a double pivot and a cam. That's there, 650.76, 651.86, 652.75. Is this 5 million print? And it could be that they were collecting the dividend, the dollar something on that. So that'd be nice to have 5 million shares and collect like $1.80 on that. And usually with the dividend, the stock would drop by the percent, by the dividend amount anyway, because you're collecting that. But we've clearly dropped quite a bit more. And then, yeah, I've mapped it out to 655.15, 656.27, 656.84 is this 9 million, and 658.02 is the 7 million from Friday. So we'll see what actually happens there. So on the downside, we're going to be bearish below 641.87. So we've got this one right here, 641.99. We'll give it an extra eighth below. We'll see if we can, if we pull back, tag this, start moving back down again. So it'd be like an H sort of pattern. And then 641, 640, 638.02 is S2, 636.53. Then we've got 630 and 626.05. So let's see what actually happens here. We break below and we've got that momentum and we have this 4 and the 8 running together. There's no reason to get out. Just like here on the daily, there was no reason to get out when we broke. Like if you were trading here, not sure if you would have taken it there, but when you're breaking below and staying below these prints, then there's no reason, because we never closed above the 4 exponential moving average. This one here did a little bit, when this was, the way that this looked when we were on this day without these extra candles here, these moving average, the top of this was actually retracement and pushing off the 8 exponential moving average. And that was still a good shorting opportunity. And even to add to your position at that point, because we're still below all of this. And we had this momentum. And so anyway, any of you that are still in, that's great on that side. Let's go ahead and look at the QQQs. And you notice that's been a theme. I've been calling the SPY and the QQQs quite often, especially when the market is melting. You can trade definitely individual stocks. I like to trade the market as a whole, and plus the SPY and the Q, the options are quite liquid on that, but the spreads are terrible. You notice that as we get the increased volatility, the bid and ask on the options are quite bad. But anyway, same thing here. We can see the massive prints from Friday, 1.9 million here at 585.99, and another almost 6 million here at 593.10 and 594. So that is above my 200 simple moving average. So this will be massive resistance here. And this is the same sort of theme, but you can see 8 million, 2, 2, 3, 1, whatever. And this was a massive distribution pattern here. And you can see overall that we're not making higher highs. This might have been for a second, but that actually just moved down. We're not making really higher highs in this, and we're just coming down. This down here is a 400 moving average, which is about 30 points below. We'll see what happens there. Okay, so let's map this out both sides. Bullish above 577. Let's get above this. We want this 576.68 to be support. Now, if you're watching this video, we might come up here, pull back, and then get in again. Make sure that you have like at least 75 cents or $1 that you can make, especially if you're trading options. So 577, target 578.59, 579.74, 580.90. You can see this here. 580, 583.22, 583.92. Right here, 584.38, 585.53, and 585.99. I wound up stopping there. This 1.9 million This is also the post market here, and this is my 200 simple, 200 exponential right here. And so if we get back up there, this will be massive resistance, and we'll see if we can turn back down. So you do have wild moves in these markets as well. When we looked at COVID, the COVID crash, you would have like a 10 or 15 point move down, and then you would have like a 10-point rally the next day back up to the 4 exponential moving average, and you could just short it again and it would just move back down. This one's a little bit different because it's been volatile day to day, and then you don't have those massive wild moves, but the retracements can be several dollars and then it turn around. And you see that like the end of the day, the other day, where it rallied 4 or 5 points just to tank the next day on that. So we're going to be bearish below 574.75. Let's get below this. Target 572.50. Then we've got 571.29 is S2, 570, 569.35 is this cam. Then we've got 567.50, 565, 560, 558.66. You can see these massive pockets down here on the downside, and S3 here is usually oversold, but the market's crashing anyway. But you've got from 558 all the way up to about here to 575. So that's 15 points anyway on the downside. Okay, there you have it. Those are your 2 trade setups for today. So hopefully you're making money on these trade setups, and check out our weekly dark pool report at mobyticktrading.com/weekly-report. First name, email address, and we send you a newsletter every Sunday. It went out yesterday. With our trade setups, we look at what we did the previous week for trade setups. We analyze all of that and learn some things about the dark pools. This week we were learning about late prints, like I had mentioned, and you get your trade setups for the following week. All right, happy trading, everyone, and we'll see you this afternoon with our results video. MobyTick has partnered with TrendSpider to bring real-time institutional trades to your charts. Click the link in the description below for more details.